Welcome in, you trader nerds. Welcome to the program. It is noon Eastern Time, October 5th, in the year of our Lord, 2022. The day after we lost Loretta Lynn. God rest her soul. And that evil person that used to travel with her that was so ugly to me during one of her concerts, whatever her handler was. Now he's jobless. Good for him. The psycho. Wasn't trying to film her. Unbelievable. All right. So, all right, market's down 1.31%. Okay. So good little sell-off after our, two mega up days. We'll notice that volume is kind of low though, right? We see it's been trending lower. So we are definitely in lunchtime chop with very low volume. This is very low volume. AD is negative 404, really, really weak. But it looks like it's, been trending upward as of late. So the market was down a good bit lower. And that's kind of coming up a little bit. And it's finding the overnight low as resistance. And it's got nothing but resistance above it, right? Everything is above it, which indicates that we would think that we're going to bounce back down, probably with so much stuff that acting as resistance above it. But we don't know. We just speculate. Look at this linear regression flat. It just a couple weeks ago was, really pointing to the south. And now we've bounced off the low regression channel, coming back up. We notice volume was up on the down move. Volume kind of stayed up, low volume on the up move. About the same volume on the next up move. So we'll see what happens today. Are we exhausted from 2 days of an up move? Probably so. So it's just right that this happens. All right, so let's go into our little shigabedig here. Let's see how much money we got in our account here. So stays 10, 5 in the year of our Lord 2022. And how bad is our count on a 1% pullback in the market? Remember, we're long deltas. So we would expect, right? We would expect to be down some. But let's see if we are. We are at 26,249.88. Well, on a 1% down move, we're down $17. We can handle that. Let's go to the big account, the IRA, and see how bad we're down here. We are at wrong one. Got too many accounts. All right, so we are at 101,691.27. So we're down $69. Wow. All right, everything's looking good. Let's go get our Greeks. We're like machines, y'all. We are machines. We know how to do this. Go to the Crimson account, take your groups off. Let's record them. 14.36 in the deltas. 14.2. Let's get that. So Greeks and ratios, 14.2. We took a lot of trades off yesterday, right? So 14.2. If you missed yesterday's program, that's the ultimate program. We were managing like crazy. So we are at, behave. Ladies and gentlemen, I have failed my mandate. Well, what's your mandate there, old Bob? My mandate is to keep 0.1% data in the account. Behave. I have failed. I'm at a 0.08, which means Sweet Bobby, must put on a trade today, especially with the market down. Buying power is 29.14. What a weakling. 29.14. So 2 out of my 3 metrics are right. My deltas are fine. I could be using, let's see, what's the VIX? Probably 29 or 30. VIX is 29. VIX of 29. So I could be using 35% of my buying power. I'm using 11%. So this is fine. This is fine. This ain't fine. Sweet Bobby got to put a trade in. All right. So then we go over to our decisions. Decision says the market is down. Market down. Do I put a new opening trade on? Yes, Bob. Yes, you do. You scoundrel, you. So let's go do it. So let's go to the other account and let's trade away, babe. Trade away. So we're gonna go, where am I doing? Trade here. Okay, here we go. Micros, go to the table. Closest to 60 without going over. So looks like we can go to 56, long put vertical. We make them 50 wide. Some of you do 30, that's fine. Some of you do 60 or 70. I don't care what you do. So 50 wide. And then I normally like to go where I can buy this for $10. Why $10? I don't know. That's just where we started doing, right? Just where we're comfortable. So I normally go to 975, bump it up a quarter so that we'll get filled. And shawang, shawang. Sweet, baby, we are in. Now, so I could do a 111 or a 112. If I do a 111, it would be where we collect about $20 or so. So we're talking about the 3120. That is a 10% probability of being in money. Am I fine with that? You know, I think I am. 2075. Let's see if we can fill there. I think I'm fine with that. Y'all fine with that? $472 in buying power for that one trade. Let's go move it up a quarter. I said, but up a quarter. Oh, I feel it. Oh, I'm going the wrong way. Hit it order. All right. Got to collect less of a credit, Bob. Here we go. 2050. There we go. So we're feeling. All right, so we got our little trade in, right? So I'll go activity and the field order. So I'll move this over to the side. It's always easier to build it in Tastyworks, just harder over here in Thinkorswim. All right, so go to Thinkorswim. So we're in the little account. We're going to trade macros. We're going to go to that 56 area. 56, I say we're going to go to the 56 area.
One day they'll allow us to do it all in one transaction on Tasty, right?
One day they're going to allow us. They will, man. Because we keep bitching and moaning. The day's coming when they're going to be like, oh my gosh, well, they shut up with this stupid trade that they're doing. I'm going to be like, hey, man. Hey, man. 3480, 3430. God, I can't believe we're all the way
What's
down
the difference in doing a ratio? Can you do a ratio spread in Tasty?
That's a good question. And they just moved one of the strikes.
Yeah, I mean, what would the difference be?
That's a good question. Let's see if we can do that. Let me get filled on this first.
I guess in Tasty, can you do it?
Matt, and I've tried that, and it just it accepts a.
Oh, I'll put it on an ES, y'all.
You did? Oh, but I wasn't able to do that there.
Look, yeah, I did it in the wrong product. Unbelievable. So now that's going to mess me up because I'm going to be like, oh, I got to do the first order, trade opposite order. I'm going to lose some money on it. Unbelievable.
I guess my question was, if Tasty allows you to do a ratio, I would think it would be a pretty simple algorithmic thing to do for them, not for me, but.
Can't believe I don't want to do this in this product. Cancel replace. Yeah, I'm gonna check it out. I'm gonna see what we can do. So I gotta pay a bigger thing. Unbelievable. Can y'all believe me? What a moron. See, it's this type of stuff here that keeps me from being great. My mom was like, little Bobby, you'll never amount to anything. I'm like, Mama, you really think so? She's like, oh, I'm pretty sure, Bob. All right, so I got out of it. I can't believe I did that. All right, I lost a couple bucks there. Dang it. All right, so let's go back over. Get the right thing, Bob. All right, don't beat yourself up, right? I is smart, I is funny, I is good looking, and somebody loves me. So 56, we gotta go to 3120. What a day that will be. I mean, ever since Loretta Lynn has gone, I just haven't been the same. 3480. 3480. Bobby, you gonna record that trade? No, I'm not. I'm just not. It's a mistake. You know, it's gonna count against me. We know it. It's part of it. All right, 1050. Let's try the 1050 credit. I'm in the right product. Come on, go, baby. Fill me. I'm a stinking believer. That filled me a while ago when that stupid ES. Cancel replace. Oh, I didn't know it went down to 10. There we go, 1050. That'll fill. That will fill. Oh yeah, baby. Back in the game. All right, so let's go put him in. Macros. So macros. All right. So here we go. MES. One tranche. We did a 111, so we'll call him 111 22nd. I put my strikes in here. You don't have to. 3480, 3430, 3120. Takes a little time, but I got nothing but time. All I do is go work out, eat a McDonald's hamburger, and come back to the house. What else have I got to do? 56. We can put a trade on it a while ago. Look at us. So we're in this on 10, 5, 22. And we got in at what, 1050, 1050, 1050, 1050. Here we go, 1050. All right, so we got $48, and we'll look at our metrics in a little bit, right? All right, so let's go back to our decision tree. So yes, we put in. Do I close a trade? No. Now, why is it telling me this? Why does it say I don't close the trade? Why?
Because your theta's too low.
Theta's too low. It says, hey, idiot, it doesn't matter if something's 128%. You can't close it. Let's just look at everything while we're at it. Shall we? Let's just go back to our groups. Let's see what we got here. Oh, let me add that one to a group. 111 22nd. Let me put them in their group, then we'll evaluate everything. Move to group, add a group, 111 22nd. All right, so let's see how everything's doing. Plus 31%, plus 47, minus 13, plus 20, plus 2, minus 30, and yeah. So then you go, and if we've been playing defense, so we kind of got, look at this, y'all. Oh, behave, resistance, be still. Just blew right to it all, didn't we? What happened? Did Biden choke on a chicken bone or something? Everybody's excited. What happened? Is Kamala, is she the president now? What happened? Somebody's excited about something. All right. So let's go back to the analyze tab. Something must happen. MES, I like to hide simulations in case I got any out there saying apparently I did. Single, simple, all groups. So look at this first. I want the market to go down, y'all. Look at this beautiful little hump I got to the downside. All right. But let's just check out our trades. 11118. We're not even in the profit tent yet. 11119. Oh, even farther away from the profit tent. 11120. Farther away from the profit tent. Look at how beautiful these trades are. Oh, what a little buffer I got to the downside. 11121st and 11122nd. PDS1. PDS1. Now that's interesting, right? So that's interesting that I've got a PDS1. All right, let's talk about that. PDS1 and unallocated. All right, so PDS1. Let me go find my PDS1. PDS1. I forgot I had him, right? So we put PDS1 in here. Why? Well, we put him in here as a hedge, right? 56 days out. Now, what I could have done today is I could have sold a naked put, right, to match up with my PDS1. Certainly could have done that. So, you know, could I still do that? Yeah. I don't want to look too much at this, but let's see. Our delta now is 1494. Theta is 2344. Let me just play with this a minute. I hate going back and changing my Greeks, right? But what did I say? 23.44 gives me a 0.09. Doesn't quite get me where I need to be, right? And let's just see what my buying power is. Probably hardly nothing still. Yeah, 33.26. I think it's prudent that I go in and find me a naked put to match with my put debit spread, right? Everybody say why? I mean, the market was down 1%. So why don't I do that? Why don't I go down in that 56 area and let's sell us something? 56, go and sell us something. Now, you could do a 112, right? And sell something down here. Get you a little theta, right? Or I could come back here where I just sold that 3120 today. I could put me another one in here.
The 112 will get you in like the 2900s, won't it?
Yeah. Yeah. Sure will. You gonna do that, man? You ready to take that risk? Let's do it. 2960. So let's
Live a
do that.
little.
Or you could do one today, and if you thought the market's going to go up tomorrow, right? You could, you could do it again. Do one tomorrow. But let's just do two of them. Let's just get it over with. Bring us in $122. Look at us. Open. Hey. So let's go put him in. So we sold the 2960 for 1250. Let's go put him in. Now he goes on his own little spreadsheet, right? He's got his own little spreadsheet. So we're gonna call him 2NP second. Let's call him 2NP second. And he is time tranches is 2, right? And we'll call him 2NP second. Or yeah, 2NP second. This is my second one of those. And he was the, what was it, 3140? No, 2960. 29, see, way down there. 2960. Puts. And that's a naked put. 56 days. And 10, 5, 22. And 1250. Does everybody see why I did that? Isn't that great? I mean, you're just taking advantage of the market. So what I'm going to do is I'm going to kind of say that these two go together. All right. So let's find them a nice little color that we can kind of, what do y'all like? You like that? That we kind of know that, these little two kind of go together. So we'll call 2NP second, naked put second, 2NP second. So let's go find him and call him 2NP second. Move to group. Now I could move it to that same group if I wanted to bond them together, but we'll give him his own 2NP second. Now, right? So now let's check out our, what do you call, theta, and just kind of see what it is now. So 27.98. What's this? 27.98. Look at us, y'all. My day is done. Sweet Bobby has done. My mama's not going to be calling me and tell me what a failure I am. She's going to go, Bubba, you've done a real good job keeping your theta up. Like my mama has any idea what theta is. All right, so I love that. Everybody see what we did? Everybody see what we did? Let's go to the second account. The IRA account. The Bobby Bear, this one out. Yeah, here we go. So we're at 48.33 on the deltas. 833. Look at that. Well, we sliced some deltas there, didn't we? No adjustment necessary. We could have as many deltas as 153. Our theta is a oh so sweet 93.99. 93.99 with a slash and theta. We're below, y'all. We are failures. All right, no big deal. DEX is still at 29. We're using buying power of 13,727. Who's calling me? From Milledgeville, Georgia. The crap is Milledgeville. Ken, you know where that's at? Milledgeville. Isn't that where, what's her name? Pretty woman's from? 13,744.
Yep, she's from there.
Maybe she's, heard about me. Maybe she's like,
it's about halfway between Eatonton and Macon. It's down there.
Yeah. Julia may be like, Bob, I've heard about you. And, I've seen those pictures of you doing planks in the gym. Hey man, how you feel like coming down to Milledgeville? And I'm like, you know what? No, I'm good. All right, so let's go back to the other account. Crimson account. Why? Because we want to get that same trade over here, right? We want to do that same trade. So we'll create a duplicate order. And I'll just move back to my account. I would be at 203. There we go. Let's see what this thing's going for now. Oh, please. Ew. 1025. I can get you break. Come on. You're gonna get me down to $10? Unbelievable. I'm gonna cancel replace. Also, because I'm down and the market's down, I'm gonna do 2 contracts. 2 and 2. And we'll pop it back up to 10. Kind of a low for us, but we're fine. We'll get $91 in credit. That should feel. All right, good. We'll put him in. And 2 tranches, which is our normal tranche size, right? So micros. There we go. And if I really wanted to do a really good YouTube channel that had like billions of subscribers, man, I'd be throwing Tesla and Apple, and we'd be doing Bitcoin and all that garbage. But you know what? That's just not us, is it? 31st. You can do all that. You're going to lose a lot of money, but you want to slang stuff, slang it, baby. Ain't gonna stop you. I just rather us do our little conservative way. So 56, 10, 5, 22, and $10. 91.18. All right. So now let's see if we've got a put debit spread all by itself over here too, right? Oh, we do. Look at this. We've got one in the 56-day thing. So same thing, right? We could do the same thing. We could put him a 112 way below him. What we do?
Bobby,
Yeah.
could you include strangles in that spreadsheet?
I think you can. I think. Well, you want to do a strangle on something? It may do a strangle. It may do, I'm not sure. Try to put it in and see if it'll do it. It may not give you the option for a strangle. But I bet if you put debit spread, it may come out with the right calculation. But I definitely do have a strangle spreadsheet somewhere, right? I mean, we got one that we could make happen if you needed to do that. So let's do this.
Just a 90-day strangle for a small account.
Yeah.
It doesn't take a lot of buying power, and it's pretty delta neutral.
Yeah, we could do that. Cancel replace. Let's go 12 and a quarter. 12 and a quarter. Oh, so there we go. Look at this, y'all. So now we got a 29.60 put at 12.25. 29.60, 12.25. 29.60. What did I say? 12.25. 5. What did we say? 56 days. 10, 5, 22. And micros. And we did 2 of those, right? So we're gonna call him PDS 3. No, I mean NP 1. NP. I'm gonna call this 2 NP, right? Because I got 2 of them. I'm gonna call 2 NP first. Try to be consistent, Bob. I said try to be consistent, Bob. Make it pretty. There we go. So 2 NP first. Let's go put him in his little place. 2 NP first. Groups. Show groups. 2 NP first. Where you at? Where you at, little feller? And then I want to do a little. Oh no. 2 NP first. That was a 29.60, right? So move to group and group 2 NP first. And then we got to put our 111 on, which I think was the 111 31st. Let's see. Macros 111 31st. Let's go get him. Group. All right, move group 111 31st. A friend of mine was asking me today, he says, how you doing in the trading, Bob? I said, good. He said, really, with this market, like going down and stuff. Say, oh yeah, we're fine. We're good. All right, so if we'll go back over to our little decision tree, our decision tree says, do you close the trade? And the answer is no. Why? My theta is too low. Well, what about now, Bob? I don't look at it that way. I look at it what it was at the start of the day. So even though my theta may be sufficient now, and let's just see if it is. We put 2 trades on of selling premium, right? So now our theta is 106.47. Just see if our theta is fine. Theta 106.47. Look at us, y'all. Looky. We are the stuff. But I'm gonna leave it like this, right? I want to leave it like it was, so I'm looking back at my strats. I can figure out why I did and made certain decisions. Don't correct your stats. Put your stats in, and then, it's fine if you want to look at what it is after you changed it, but then change it back to what it was originally. Right? Don't overthink this. Because then you won't understand if you're going back to the trade log, you won't understand why you put trades on 10.5 if your theta was sufficient and everything, So keep it as it is first, because this is what we made our decisions on. Now, interestingly enough, let's just go look at our trades, right? Let's see how they are. So here we go, down 4%, up 27, up 17, -8, -5, -15, +7, -31, +47, -44, +84%. And then just when you're looking over there and you see, you see somebody at the old tiki bar and you go, 84, oh, you're looking good. And all of a sudden you look down here and you go, 193%. Well, hello, Julia Roberts, right? Calling me from Milledgeville, Georgia. You're up 193. Now, here's the trade that I posted yesterday. Here's the trade that I'm a wee bit excited about, because right now this trade is up $322. Let's go look at it. 11121st. Now, if you missed it, we had a session earlier this week called for mature audiences only. And this is why it's kind of exciting to let some of these trades go to maturity. Now, I know this is going to kill some of y'all because you got to go, Bobby, I got to roll at 21 days. Not on these trades. Not necessarily. Not on the 111. Y'all need to forget the rolling at 21 days on some of these trades. And I'll show you why. What's the analyze tab? Now let's go to 11121. I want you to see that today we're up $328 on this trade. Look at the theta on the trade, $34. We got 17 days left of me making $34 a day. And I'll be making that even if the market from here drops down 5%, y'all. 5%, we're still going to end up in profit of 900. Y'all follow down here, right? We're going to be in the profit zone of $918.75. Now, Ed and I had a little conversation yesterday, and Ed was like, tell you what, Bob, you got 3 tranches here. That's what he says, tranches. He says tranche. And I was like, Ed, what are you talking about? He said, you know what you could do, Bob? Lock in the profit from one of those, right? And then, hey, let the other 2 kind of do. So we could do that. I would do that if I had more theta, right? If my theta was too high or toward the upper end, I definitely probably take one off today. I don't think I need to. I want you to watch the maturation, if that is a word, the maturation of this trade. All right, watch this. Watch this trade. Ready? Hold on, let's do this. I want you to watch this, but I also want you to watch theta at the money, and I want you to watch Vega. Watch theta, watch Vega as I advance this along. Okay, so here we go. Tomorrow, theta stayed about the same. What did Vega do? Let's go back. Vega went to 34 to 36, right? Okay, so just kind of watch this little thing here. So now I'm up $354 on the trade. Okay, let's go up to Friday, now I'm up $392 on the trade. Oh, hey. So it looks like our theta is still staying nice. See how that theta is even grown, right? It's 35 on Friday. Watch what it is today. Let's go back. You see how that little theta is growing? 34 to 35, right? So let's get some weekend decay. Nothing's going to happen market-wise over the weekend. Now, this is assuming everything stays kind of where it is, right? So over the weekend, there's the, okay, theta even goes up again. Let's go to Sunday, the 9th. Theta's still kicking in. And you see this now? Now by Sunday, we're at $461 profit. Now let's go up a little bit more to the 10th, which is a Monday. Look at this theta. Still booming, y'all. Everybody see this? And this thing is really starting to pick up now. Watch it pick up. 37 in theta, 37.76 in theta, 38 in theta. Now watch, all the meanwhile, the Vega risk, the risk of volatility increasing is decreasing. It's decreasing. Yeah, you can't find a more perfect trade if now we're making assumptions, market kind of stays in here, right? Your volatility risk is going down, your theta is going down as well. I mean, your theta is going up. Watch it. Let's go out another day. So it's 38.57. Let's go out to the 13th, 39.08. Vega continues to fall. 39.59, 39.65. So we're out to the 15th. We're out 10 days and our theta is still increasing. Look at this, y'all, this beautiful profit hump. Now in 10 days, you're up $700 on the trade. Bobby, what if we get a big 5% down move? Okay, you're going to be up $180, but if you can hold on for 7 days, this thing right here is going to whop up huge. All you got to do to follow the theta here is to follow this number, right? The 5% down number, which is 67. So follow this one and this one if you want to. Let's go to the 16th. Look at that. 39 and 72, 40 and 79, 38 and 88. This is where our theta starts going down. Where is that point? The 17th, all things being equal, is the apex of theta. So if I had my druthers, I'd at least want to keep this to the 17th, right? Because that's where, you know, now it's what is that? The marginal, what is it? Oh my gosh, I'm going back to my economics today. Diminishing returns, right? That's what we're talking about, the margin of diminishing returns. Our theta past the 17th starts decreasing, 38, 35, see that? Or 26, then it's really, that's when you really go, you know, is the juice worth the squeeze of staying in the trade? Yeah, you got another $30 in the trade, but is it worth staying in the trade? That's when you start, yeah, you know, you could let it kind of go close to expiration, or you can just go ahead and take it off. But I wanted y'all to see that. I wanted you to see that this trade is not one that you're looking to necessarily take off really early. This is a trade you want to mature. This is a trade you want that big old profit hump to go on. Now, Bobby, do you have risk? Absolutely. I got risk. If we go down more than what? This is 5, 7, 8% or whatever, your break evens move to down here. Yeah, you got risk on a big, big, big move. But y'all, we're down, what, 1% or so today? And look how beautiful this is. You want to go down another 2%? That's fine. You want to go down another total of 5%? Where you at? Look how beautiful the trade is. Oh my gosh. With the potential to have $900 in profit. And as Ed said, you know, I'll be looking at my metrics. If my theta gets too high, I can certainly take one of these off. I got 3 tranches. I got 3 contracts, 3 tranches of this 1-1-1 trade. Isn't that beautiful? Anybody else beside me I was just looking at it yesterday and I go, dang, this is good. God, is this good? You know, is it the holy grail? Oh, it ain't the Holy Grail. Y'all know it's not the Holy Grail. But man, when you start stringing these things together, I mean, look at this account. I'm sure the market's still down. We're up $69 on the day in this account. Well, what does this account look like? Look at this. Let's go to curve. Let's go to analysis. Let's see what she looks like. Okay. Let's see. Wow. Look, I mean, look, what a portfolio. Look at this. Look at this. And this one is the one I told you that does better than the other accounts. But why? Because I don't necessarily, I freehand this account, right? So this account, I got them coming in. Look here. I got 16-day stuff. I got a lot. Look at the 16-day stuff. Look at all those that are in the money. Those are put debit spreads, y'all. And on a big old green day, I take some of these naked ones off, right? I just take them off, just slide them off a little bit, a little risk here, a little risk there, kind of keep my deltas under 100, just kind of freehanding it. I don't keep a spreadsheet on it. But look, here's what I do look at every day. I look at this and I go, my God, are we on to something or what? So let's say it's your first day checking out our channel. And you go, what the hell is this? You got no idea what this is. But all you need to know is we got a hump of profit to the downside. And we just build it up every day. We build this thing up. As the days go by, it gets sweeter. As the days go by. Y'all remember that old gospel song? Gets sweeter as the days go by. And it does. And so this is the T0 line. See the orange line? That's T0. Time today. And this is expiration, right? But as the days go by, it gets sweeter and sweeter and sweeter and sweeter to the downside. So that if we get a pullback to 3640, where we were the other day, look at expiration there. You're up $4,500 in this account. God, that's sweet. I mean, are y'all getting it? Y'all are so quiet so many times. I just don't know who gets it and who doesn't get it. Ed and I talk about this a lot. It's like, I don't know if y'all are doing this or not. Are y'all just watching, me being the guinea pig, me taking the risk, or have y'all plunged in? Are y'all doing the trade? I don't know how you find anything better than this. I really don't. Anyone got any questions or comments? Y'all good? Fine. How do you analyze the trade in Tastyworks? Yeah, so go to the trade tab, right? And click on the curve and click on analysis, and it's Expo and the Theo or the zone. So there's theoretical, right? This is today. Everybody see that? That's how my hump looks today. Then you move it to expiration, right? When those things get to expiration, so I just keep it on expiration most of the time to see it at expiration. You need to keep in mind this orange line is today. So if you go under the 3,600 mark today, right, you're going to start seeing losses down here, right? You'll see losses at about the 35, is that 3576? Yeah. Start seeing a little bit of daily losses, but at expiration, you're up big. Gerardo, for people just starting, this is a good week to start building the hump. Oh yeah, heck, today is the day, y'all. Now, if you are just starting, you should not have started yesterday or the day before because the market was up big. You don't start on those days. Now, if you want to start on the big days, what do? What do you do? Gerardo, everybody know what to do? If on a big up day, you say, man, I can't keep my hands in the pocket. I'm a trader. Trade the market, baby. Put you on a put debit spread. That's it, Gerardo. Buy the PDS. So y'all got to keep in mind, and I draw this a lot. Let me draw it again for our new people. I know we always got new people, right? New people. All right. What do? Here's what you do. What if the market is up? Okay. Market up. Market up. You buy puts. Everybody with me? Market up. You buy puts. And I guess if I do market up here. And you sell calls. That's what you do. Well, Bobby, how come you didn't sell a call yesterday? Hell, y'all know why I didn't sell a call yesterday. What happens when I sell a call? Market runs up, market beats old Bobby in the face. I lose on my call. What did Matt say the other day? He said, hey, Bobby, the market's going down so much. Would you mind selling a future? Because every time I sell a future, what happens? Market springs to the upside. So you don't need to do that either. So what I do is on an up day, I'll say, okay, I don't want to worry about the calls, but I might buy a put or a put debit spread. Why? Well, you can get your put debit spread cheaper, so to speak. You're actually getting it closer to the money. You're able to put a hedge, your put debit spread closer to the current price on an update. All right, market down. What do? So let's say this is market down. Market down. That's when you sell puts on a down day. What did I do today? I sold puts and I put it on the entire 111. You can do that as well because the heavy work is being done by those naked puts, right? So on a down day, you sell puts or you buy calls. You're just using market movement to make the most advantageous, the best move, the pot odds move. Gerardo says, let Vega give you the opportunity to squeeze more premium in a down day. Yeah, I could see that, right? Because we are short Vega as option sellers, but if you are putting on a put debit spread, that has long Vega, right? So it benefits from a increase in Vega, which would be a move to the downside. Now, and it doesn't, we don't have to get all that technical in understanding this stuff, but just the more that you do this, the more you'll be. So yeah, you can find other people on YouTube that are out there. For those of you who just watch us on YouTube, you can find people out there that are slinging trades, baby. They're just slinging everything, and that's exciting. And you can do that for 2 or 3 years. And what you're going to find is you're going to lose money over and over and over until you're able to put whatever trade you're doing, strangle, straddles, whatever you're going to do, you got to put it into a strategy. You got to keep up with the metrics. Pumpkin Man, could you quickly review your 111 naming convention you use in time? Yeah, it's not much to it, right? So what I do is if I do a 111, I just name them one right after the other, right? So here's most of my trades I do together. So you see I've done the 111, or I call it 112, and then I just go numerically down the order, right? So here's 112, 32, 39, 40, and I keep numbering them separately from the 111s, right? So here's 111, 17. My next one's 18, 19, so I keep the 111s and the 111 21st, I keep the 112 separate from the 111. All right, let's do some stats real quick before I let y'all go. So we had problem children yesterday, and we got rid of our problem children. Look at there, and we made money, y'all. We made $99 and whatever 5 cents. Made 90-something dollars and a couple pennies on our problem child. This is trade management. So now let's go look and see what our realized returns are in the account. So you and I have made, after commissions, doing these trades, not the stupid stuff I've done, not the ES, not the SPX, not all the garbage that I've done. But if we had done nothing but 111s and 112s, you and I have made $4,000 since March. And that's great, y'all, because the market ain't made money since March. So if you're looking at how we've done compared to the market, now my return is going to be a little worse, right? Because my whole return on the account is negative 4.27. Well, Bobby, I thought you made $4,000. Well, this is other garbage that I've done that I'm no longer doing, that I was doing. So our overall account's down 4%. Even with the dumb stuff, we're beating the market, which is down 13.58% in the same amount of time. If I hadn't done stuff, we'd be up. Else and butts, candy and butts, Christmas all day long. So let's go to our weekly premium tab. Let's review. We're keeping 58% of the premium on our trades. Our projected profit, we think we're going to make $5,000. If we'd only done this trade, we're on track for about a 19% return. Should make profits of about $100 a week. We have, again, made profits of $4,000. We're staying in the trades about 20 days. Here's our average credit per trade that we put on. We've got a 92% win rate. Now, that's going to be a little low because we should have around a 98% win rate. But remember that when I'm doing this type stuff, the naked put's going to lose. It's taking this into account too, right? So while the overall trade was a winner, it's going to count this as a loser. So I'm fine with that. I don't want to. That's not an issue I'm looking to fix. So we got a 92% win rate. Every trade that we put on in this account, we are expecting, based on our past performance, to make $42. So if I sell $67 in credit, I expect to make $42 in profit. That includes losses and everything. On average, the trade has a positive expectancy. Let's go to the other account. Same thing in here. I've done dumb stuff. So I want to make sure everybody thinks, oh, Bobby, he's the best in the world. No, I'm not. I do dumb stuff. And in this account, you and I have made $6,999.22. That is after commissions doing this trade. Our performance, even with dumb stuff, with SPX and the ES and Black Swan hedges and everything we were doing earlier in the year, we're flat on the year. We are flat. While the market during the same time is down 16.11%. Market down 16.11. You and I are flat, but we wouldn't be flat if we just done this. If we just done the 111, we'd be up $7,000 on a $100,000 account. That's pretty darn good, y'all, in this market. I'm happy with that. Let's look at our stats. We've got a 60% capture rate. We project that we'll make $10,000 by the end of the year. We're on track for a 10% return. Projected profit per week, $191. We're staying in the trade over here about 24 days. When we put on a trade, now here, remember, sometimes we do 1 lot, sometimes we do 3 lots. But on average, we're collecting $103 per trade. We project, again, profits of about $10,000. We're looking at a 10% return, 94% win rate. And when we put on a $103 trade, our trades have a positive expectancy of $61. And that's something you need to know. Okay, so say you're not trading this. Okay, what are you trading? Does it have a positive expectancy? This is a positive expectancy, y'all. Through hell and back. Through hell and high water, you and I have been, right? And this trade is doing phenomenal. Phenomenal. Through a bear market. And is it because we're super duper traders? No, it's because we got this nice little profit humps that we're building up the downside. This is what's happening. So forever gimme, there's a gotcha. We take in less premium because we're having to buy put debit spread. The gimme is that we get to keep a larger percentage of the credit that we do receive. Because instead of us keeping on average 25% of the premium that we sell, we're keeping 60%. Forever gimme, there's a gotcha. Yeah, we've got a cost of a put debit spread, but because of the put debit spread, we get to keep a larger percentage of the credit. And that's great. Boy, this is great. This all gets you all excited. This all gets you all excited. All right, who's got questions now? Something y'all need me to go over it all? This is a strategy where the market needs to commit first to give you the profits built in the hump before killing you. Yeah. And even so, Gerardo, what is your ultimate hedge? I say ultimate hedge so many times. We should already know what the ultimate hedge is. The ultimate hedge is what? Trade size. Trade size. Bobby, you don't have any stops in place? Not a one. Wait a minute, Bobby. Are you closing them if it reaches a 2x loser? Not a single one. Well, what are you doing? I'm doing portfolio management. So you're not doing trade management? Not unless my strikes are tested. Not unless my naked puts tested. Then I go into defense. And if you've missed anything in the last 2 weeks, if this is your first day and you go, my God, what am I going to do when crap hits the fan? Well, we had crap hit the fan. Did we not? And look, here, I can't stress this enough. I mean, I wish I could beat it into y'all's head. I really do. I wish I could beat it into your head. Look at our buying power. Over the crap, y'all. Where was I out of line? Did I ever get over 35% or 40% of my buying? Look at this. Was I ever in trouble? Okay, right here. August and 1st of September, I got a little high. Should have been 35, but I got a little high. I was able to defend the positions. We were able to go into the bunker. We were able to play defense. Okay, Bob, I bet you've never been tested any more than that, have you? Well, let's see. Let's just see, y'all. Have we? Okay, there I was over a little bit. Oh my God, he was using 80%, 94%. You're telling me that you were using 94%, you should have been using 35, and you were long too much deltas and you had too much theta, and you survived and you've had realized returns of $3,984? Yep. Yep. I've traded through it. I'm not saying I'm the greatest trader. Y'all know I'm the worst. But we made it through this. Is it over yet? No. Do I have more defense to play? Yes. But hadn't it been a great answer to our question? Can you imagine if we'd never been tested and we never knew what to do? But what you and I have done is we've worked together. We have mastermind sessions on Monday. And then during our mastermind sessions, we're able to talk about deep level stuff. And we talked about hedging the other day. And after we came out of our mastermind session, we basically were saying, you know what, screw the hedge. We don't really need it. Would someone correct me if I'm wrong? Is that not what we said? Screw the hedge. We don't really need it. What is the ultimate hedge? The ultimate hedge is our size, keeping your size small. Okay, so let's say we get a few of our naked puts breached, right? Price just blows on by. What are we going to do? Well, we've got a plan. What's the plan? We got to either roll down in the same cycle or roll out and down into another cycle. Might we, at the worst possible scenario, might we have to do that for 6 months or more? Maybe. Maybe. But you know what we're going to do? We're going to use market movements to keep in touch with the problem children. And what we do is when you get put into the problem child, you get, I actually call this timeout. When we get a trade that gets in timeout, we're going to go over here and we're going to keep up with our debits and we're going to keep up with our credits. And at the end of the day, when we are finished with this trade, our credits are going to be bigger than our debits, which means what? We have made a profit. We know how to play defense. You and I know how to play. So let's say we wake up tomorrow and the market's 20% down. Here's what you and I are going to do. I will leave the gym if I'm already at the gym. I will tell my little trainer, listen, gal, market's down 20%. I got to go talk to my peeps. So I will come in. I'll tell y'all I'm on the way. Y'all just hang loose. We're going to go live. And you and I are going to put our problem children into timeout. And we're going to do credits and debits and credits and debits and credits and debits until we roll these things, until we make a profit. That's what we're going to do. That's the plan. That's the plan. Gerardo, I remember 111 when the year and the bear market started. If I remember, none of those were losers. Exactly. Now, unfortunately, I started doing these in August of last year, of 2021. And dumb me, got away from the spreadsheet, you know, stopped tracking them, stopped figuring them out. But what happened is we were in Hedge Fundy's Excellent Adventure and we were doing AIM at the first of the year. And we lost a lot of money in that, y'all. Now, that was a buy and hold strategy that, you know, you don't, you know, we were like, well, if we sit on this 20 years and that's what we were going to do, right? And finally, we was like, screw this. You know, we're down big on this crap. We're going to do something else. We're going to actively get back into active management. And that's what we did. And so what we noticed is that, hey, wait a minute. During all of the fury in January and February and March, we were still making money on the 1-1-1 trades. That's what was weird. We were still making money on 1-1-1 trades. And we were like, hey, maybe, just maybe we ought to focus on those. And that's what we did. That's all we've done. It says, I think the answer is to continue to enter positions, but beware of a pullback as it can balloon the buying power percentage, especially in the real power market, followed by correction like we had in July and the August peak. Yeah, and that's the good thing, right? If we go back into an area where we're just rip higher, and you're scared of a pullback, okay, when you've got these things on, you're going to be making money, right? On your 1-1-1s, and maybe you have to put them on even on up days because you've got, you don't have enough theta. You got to sell something to keep the theta up. So what do? Well, here's what you do. You buy an extra put debit spread on these up days. Keep your theta up. So you're using theta to finance the purchase of your hedges. We talked about that earlier this week. We used our profits from today when the market was up and our future profits to finance the purchase of hedges. So what did we do today on a down move of 1%? Well, I sold two naked puts in that same expiration with my hedge. So my hedge got a couple day head start of building that little profit hump, right? And then on a good down day, we sold the naked put. This is so good, y'all. This is so fun. And I hope y'all are really getting it. I hope you are. It's too fun. This is strategic. All right, guys. Great session today. Hope you have a wonderful day. I'll see you tomorrow.